Welcome back to our channel. This is Soji and you are welcome to Soji Forex. To all our new subscribers, I want to say thank you for subscribing to our channel. Thank you for liking our videos. Basically what we do on this channel is that we backtest a strategy through our research of the market. We practice those strategies, knowing the lapses in the strategy, and having gone through the rigorous process of backtesting the strategy, we come forward to share the strategy with you so that you can take advantage of it in trading the financial market. In our previous video, we looked at how we can take advantage of our middle Bollinger Band of period 130, which is this green line. Okay, and how we can use the default Bollinger Band, which is the one with the gold line we are seeing in trading the financial market. So today we want to throw more light on how we can use this lower Bollinger Band, I beg your pardon, the middle Bollinger Band and the default Bollinger Band. So we have established that whenever price is above the middle Bollinger Band, this middle Bollinger Band of period 130, with price is above it, all this place is a sign that we are in an uptrend. It shows we are in an uptrend, and then it becomes confirmed that we are in a downtrend when we see this particular scenario take place. We are in a downtrend when price crosses this middle Bollinger Band and close below it. So any trade we take below this middle Bollinger Band is a continuation trade, and any trade we take at the upper Bollinger Band is our reversal trade. Any trade we have in this region, you can see the green upper Bollinger Band, any trade in this region is a reversal, while trades below this region are all our trend continuation trade. Okay, so having established that, and we said how do we take a reversal trade, we want to see price piercing the upper band of the Bollinger. We want to see price piercing the upper band of our Bollinger, which is the green, and after that we want to observe from our indicator window 1 that the MACD histogram is actually approaching the level of 90, and from this case we have double confirmation we're having a divergence. And if you don't know what divergence is, it is advisable that you go to our previous video. And above all, we said we want to see that there is a cross between our stochastics, and as well as our moving average 10. We want these three things aligned. we wait for price to close below two of our moving averages, either the 10 or the 15, that will make our entry. That is for reversal, but our focus today is how we can take a trend continuation trade, which means that after our trend has been confirmed in this region, price closes below the middle Bollinger Band, we are now in a downtrend. Okay, so we want to see how do we take this continuation trade. So the first condition is to see that price closes below the middle Bollinger Band. That is to say you have missed the reversal and now is a trend confirmation. So once price closes below the middle Bollinger Band, the next thing you want to look out for is that you have already seen price has come all the way down here. Okay, these are blue arrow, shows that price has come all the way down here. So next, we want to see price drive back towards our upper Bollinger Band of the default mode, which is the one you are seeing up here, this particular gold line. We want to see price pull back towards it, just as the price is going up now, pulls back towards it. And once price begin to pierce it, we'll take that as our exhaustion point. And having established that, we also want to see price return from it, coming down again, and at this time let the price closes below our moving averages. And if that is established, we go in for our sell, and our stop loss is going to be at the previous high where price pierces the upper Bollinger Band. Okay, in likewise manner is what is about to happen. So let's look at another asset and see what exactly is playing out there. Now you can see this for a sell. You can see for the sell, first we say for us to sell, a reversal occur here, and after this reversal it closes below this middle Bollinger Band. That is to sell crash 1000, and after this close you see that price moves back. Okay, and having done that, it closes below. You can have your entry. Your stop loss is up here. It's up there. Yeah. And then for a second time, you see that price pull back, pierces this band here. And after the price has pierces the band, you see that it begins to drop all the way here. So what are we saying? What we are saying is that we trade from upper Bollinger Band to the middle Bollinger Band, and then take continuation from the middle Bollinger Band to the lower Bollinger Band. And upon getting to the lower Bollinger Band, we will now begin to look for another opportunity to trade from the lower Bollinger Band to the middle Bollinger Band and then to the upper Bollinger Band. Okay, and if you are a type that trades a market structure, you realize that here is a structural point, it's a lower high, a lower low, lower high. You will agree with me that this is a lower high, this is a lower low, this is a lower low. Okay, and now we want to see this price pulls back from here to this level and then drop from there. Okay, so this is basically structure. This is basically structure. So you can combine all of this together to take advantage of the market completely. Okay, so now we are looking forward for this price. You see that the structure is still in line. This is your range, this is your another range, and price will now move. We are saying we are looking for a trade continuation, so price will move from here now all the way to our upper Bollinger Band of this period 20, the default one, which is also the zone of our order block. This is the zone, and then it will begin to drop. Once it's close below our middle, our moving averages, we take our entries, and then we are coming all the way down. And if that is not the case, we are looking forward to as well derive what we are seeing now. Considering the fact that we trade from lower Bollinger Band to middle Bollinger Band, with what we are seeing now, we are seeing price has already pierced this lower band, and then we are waiting for price to move and close above our moving average. Then we'll take a buy and we ride to our middle Bollinger Band, hoping for a reversal. If it doesn't happen, then we move it back up here. So these things are pretty much simple. They play out almost all the time. Look at what happened. Look at this structurally. This is a lower low. This is a lower high. And then you can see that price came down here. Which we are saying it moved beautifully into the zone of the order block. And you see that the zone of the order block is the same zone with our middle Bollinger Band. It is the same zone. This structural point here is the same zone with our middle Bollinger Band. So this gives us more confirmation that, considering the fact that we are having this bearish order block, price move majestically come into it at the zone of the default Bollinger Band and at the zone of our own middle Bollinger Band, and there is a beautiful drop from that region. So this thing is pretty much simple. All you need to do is to train your eyes to identify them. Train your eye to identify them. Right? And look at here again. All these are examples of trade continuation. And in that scenario, you need to pay attention to not necessarily this time indicator window 1, but to indicator window 2. And then you see that the moving average will continue to make a cover below our stochastic oscillator. Now look at what happens here. The price beautifully moved from this region to the upside, closes above the middle Bollinger Band, and then see what happens. It returns back inside of it. Remember, we see Bollinger Band are treated as zone, not as a line. Move toward the zone of the lower band, price went up, closes above here, and then boom. You can see that beautiful move up there. And you can also consider to trade this structurally. And how do you trade this structure? You consider your higher high, okay, and your higher low. This is your higher low, higher high, higher low, higher high. You can see it. This is another higher low, another higher high. So structurally, so this thing keep on aligning with our indicator. So these indicators are not just there, okay? They are serving their function beautifully. A structural point here, and then we'll have another wonderful structural point at the top. So this thing works perfectly. And then look at what happened. Price returns back into the structural point and went up beautifully. It returns back again, move up, closes above the moving averages, and then went all the way up until this point where this drops, that will have a break of structure. And from what we are seeing, this move, we are already having a trade idea. We are already having a trade idea for this place, because if you look at this, look at what is happening. Market has been making a lower low, but look at our indicator window 1, you realize that it is making a high. This is a divergence. So there is a tendency that from here now, we are about to take this price. We are about taking price from this zone and then to the upside. So we are looking forward to a buy from here, at least into this shaded portion. Yeah, once price closes above this moving average, our first entry, we are looking forward to take our profit somewhere here, or we take partial and we ride to the upside. So this thing are pretty much simple. All you need to do is backtest them. Look at my markup for this trade that I took earlier, and then you see how everything went up perfectly well. All you need to do, train your eye to identify this pattern, and it all plays out. So here, this is my first entry. I've been holding this trade, and I'm looking forward to take this entry again. Once price closes below this moving average, I'm going all the way down. I'm going all the way down, all the way down. So these things are pretty much simple. And another hack, we haven't talked about our step index in a while now. So in the subsequent video, we'll be explaining how we use the strategy to take a perfect rate on step index. On step index, I don't know of any other asset, but through my period of backtesting, I've seen that this thing works more on step index and on boom and crash. So please, if you are getting value from this video, do not forget to like. Please like the video, subscribe, comment, and share with your friends and loved ones. Subsequent video, we are looking at how do we trade step index with this powerful strategy. It's simple and it is straightforward. So till then, see you in the subsequent video.